very accurate, and it's not something that a lot of people do. But I find it helpful, and it's obviously has some utility behind it as well.
Well, that's actually pretty sweet because I used to always consider, okay, like, most people would consider range trading, or someone might consider demand and supply zones or something. But
Yeah,
even like the first time when I heard you talk about just BTC options in the chat, and I was like, damn, that's a very, very interesting take. And after, I was like, because I'd always ignored the option, but then I was like, makes pretty much sense. You're just looking at how the big boys play all along.
exactly. Because it's limited to big boys, right? Because you can't buy fractional options. You pay like 150 grand per option if you want one that has any like chance of making money. So I mean, you're pretty limited to only the big players, and that gives you a very, very different view from just looking at the futures charts. All right, just give me 1 sec, guys.
Sure, sure.
All right.
Okay, buddy, you can, I believe, get started. We'll also be having the stream recorded, so later on it would be available on our YouTube channel, and I would send across the link to you as well, in
Yeah,
case if you
perfect.
need it. So, cool, bro. Over to you.
Thanks, man. 1 sec, guys. Just gonna launch my trading view here. Yeah. So if I just go on this chart here, there we go. Yeah, let me share my screen as well. Screen, there we go. Okay, so like the title of the stream says, we're going to go over supply-demand zones, supply-demand in general. You can go super in-depth on this. You can be pretty surface level. The way I use it is pretty lenient. I don't follow any like set rules. I just identify supply-demand zones based off discretion, so based off experience, basically. But there are some telltale signs that will help you identify these zones and how to use them as well. So, if you don't know what a supply-demand zone is, it's a zone where price has gotten a lot of either supply or demand. And supply-demand is the simplest model we have for predicting why price moves the way it does. If demand is high, it means the product is more scarce, and therefore people are willing to pay more for it. And if there's supply, it means the product is less scarce, and therefore people can get it for cheaper. That's sort of why you get that's the simplest model we have for telling us, okay, why does price move up here and go down here? Well, because demand changed or supply changed, or both at the same time. Right? So the way you use this in trading is obviously you can look at auction market theory, etc. But I don't do that, just because it's pretty. Auction market theory is very, very difficult to interpret when you're in a market like this where most of it is run by algorithms. It's pretty difficult to interpret. Obviously, it's better for simpler systems, but Bitcoin is not a simple system. It's not easy to interpret Bitcoin in the sense of auction market theory. That's why supply demand is more so suited for that. So there's two main ways you look at or you find supply demand zones, right? It's basically you can look at, or I at least look at supply demand zones very, very similarly to order blocks. I find them to be very similar, do the exact same thing. And so basically what you're looking for is some resistance or some like pressure before a big move, right? So let's say we have like this. Price moves like this, and then we see this, and another move. This, in my eyes, would be a demand zone. Because we saw some counter trading, people pushing price down, or resistance, but we pushed through, right? Because there was more demand than supply, or higher demand compared to supply, and that pushed price higher because people were willing to bid higher, basically. Same thing for downside for supply. if I move like this, this would be, in my eyes, a supply zone, right? Because some people push price up or held price flat, but at some point, supply became too large for demand, and people could get it for cheaper. People were asking less and less money for, in this case, Bitcoin, and that pushed price way back down, right? That's sort of the simplest way to look at this, right? And this is just a very, very we see a push up, push up, this consolidation, another push up, this consolidation, right? So we have this demand zone, and we have this. And I don't really follow any rules when drawing this, like you have to draw it from the wick or whatever. I just mark out the rough structure of it, because it's obviously not going to be perfect every time. Let's say we were to draw this perfectly, based off a common rule, which is going to be the wicks of the last bearish candle. So there we go. It's price obviously isn't going to nick this perfectly, like bam. It's obviously going to most likely push through, and we see some absorption, and then we get a push up. That's the idea. So I don't really worry about drawing it perfectly. I just mark out the rough structure of it, which is this, right? So that's my demand zone. That's one of my demand zones. We have another one here, which is mitigated. Okay. What mitigation means is it's less and less valid, right? Or mitigated means it's not valid anymore. But essentially, a supply or demand zone can be tapped into plenty of times, because there's no real inherent difference between a supply demand zone and a support resistance, right? They're very, very similar and can be used very, very similarly. Okay. So we can see here that this demand zone, which we marked out, touched up, touched up, touched up, touched up, touched up, touched up, etc. These can be tapped multiple times, will not be invalid or mitigated. The way to look for a mitigation is if, for example, if we draw a demand zone here, alright, like that. There we go. Here, for example, here's a demand. If we see something like this, right, where we push down, we close down below for a long ass time, this demand zone is pretty much invalidated, right? Because, well, all the demand that was here has been soaked up. Give me 1 second. So I'm just gonna stop my dog from barking here. 1 sec. Okay, so this will be a mitigated demand. Okay. Same thing for supply. So I'm not gonna do that. Let's go over here. If you see something like that, right? Here's our supply zone, based on the rules you marked out earlier. We went above, and we have closed above for a long ass time. That means this is pretty much invalidated, because our idea is that there's left supply here, right? There are orders that haven't yet been filled, which would push price down. But in this case, because we have pushed through and closed above for several candles, this is pretty invalidated, right? We're approaching our idea that this demand here is invalid, right? Because we have our demand, we tapped into it multiple times, and just now we're starting to close below and stay below, right? Which means that all the demand that was here, that has been here since start of December, is starting to get soaked up, and it gets mitigated, right? Same thing for supply. Let's see if we can find an example of this. Here, for example, we have a push down, consolidation, another push down. This marks this out as a supply zone. And touch, bam, 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 and still. And over here, we pushed right through and stayed above, which means that this supply that was here, over here, has been soaked up, right? So that's basically how to mitigate these zones, right? So we identify the zones by placements, these huge moves, right? Where you have consolidation, and boom, this is a displacement, okay? A supply and demand zone is usually some consolidation within this displacement, right? So instead of going like this, it would go something like this. This would be a demand zone, okay? That's my way of marking these out, okay? So in this case, we have this one, and this can also be interpreted as a demand. Over here, we have this. These are sort of difficult to spot in the start. But this would also classify as a supply. Actually, I'll go down here with this wick. 12%. And movement go super in depth on this and waste your time, in my opinion. But that's basically the idea. You're looking for consolidation within a displacement or within a huge move, and you mark that consolidation out. Okay, and the way you can sort of make these, higher likelihood, higher probability, is to stack other things on top of them. Okay, other confluences, right? So one way we can do this is to go on something like a bid-ask chart and mark out some imbalances and see if these imbalances match. Okay, let's go ahead and turn on exo charts here, which is my go-to one for bid-ask. Hello, can you please explain how to find stop loss in your signals? Yes, I can. I'll just do this first. Okay, so one sec, guys. Let's go back here. Change my screen. There we go. Then we'll go over to Bitcoin on the same time frame we were on, which is let's see here. This is the 4 hour. Do the 300, actually 182 hours, 4 hour. Let's see if any of these supply zones we marked out earlier has any confluence behind them, as for example, bid-ask, a bid-ask imbalance. That's what we're looking for here. So I obviously can't share both my extra charts and my trading view, so you're just gonna have to sort of trust me on this one, that I show you guys the real levels. Up this a bit. 40 is good. Okay. So I'll just actually share the chart in the chat, actually. So in the chat, I'm pasting my trading view chart. There we go. So our next demand zone is down at around 39.8. That's where it starts. So let's go to our extra charts here. 39.8. Do we have anything? Actually, what was it? Let's see. It was 39.8. Okay. So let's see this 39.8. That's over here. Pretty flat. Turn this down a bit. 25. It's good. And as you can see, I'm going to make this horizontal. There we go. There's not any massive bid-ask imbalances, right? The bid-asking balances look like these boxes here. That's bid-asking balances. We don't have any of these. So actually, let's turn on the tick again to 50. And we can see we don't have any massive bid-asking balances. That makes this demand that we marked out first less or lower probability because we don't have added confluences. We only have our idea that this is a supply-demand zone based on the fact that we saw some consolidation between displacements, right? That's all we have. So that's what I would classify as a low probability demand. Still demand zone, still valid, but lower probability than something else, right? So our next demand zone would be down at 38.8, okay? So what's it, 25? So 38.8. Let's find out 38.8. That's over here. And as we can see, we have a bid-ask imbalance right at our demand, which is this consolidation here. This is our demand. And we have a bid-ask imbalance, which you can see with this, which you can see with this box here, and they line up. So that's obviously a higher likelihood, higher probability demand. Higher likelihood than the other one, okay? And let's do the last one as well. That's down at, actually that was the last one. We have one as well down here, which I'm going to share in chat as well. Looks like a matrix, okay. We have one at around 30K. Let's go back, the Excel chart, 30K. And what do we see? Well, we see the exact same thing, right? So that again would be a higher likelihood demand, higher probability demand down here, okay? So that's sort of how I add more confidence to the zones I've marked out just from looking at TradingView, okay? I go to, for example, a bid-ask chart or something like that and see, okay, is there anything here that I can add onto my zone? Well, in this case, there's a bid-ask here, there, and there. And that's step number one, okay? So we can immediately identify that the zones we marked at are pretty good. They're pretty good zones, right? So now we can go on to something else like a TPO, which is also something I love using when marking out supply-demand zones because it tends to work pretty well, tends to add good confidence. And what you're looking for here is either some distribution, so distribution on a TPO. This is not a volume profile. This is what you call a TPO. They're not the same thing. A distribution looks something like this, where you have stacked triangles, right? Okay, so something like this. We have plenty of stacked triangles. That means that this here would be a nice distribution, okay? Let's find our already existing levels, which we marked out. We have one at 39.8. Let's find 39.8. 39.8. Oh, limited data, nice. Let's actually look for a supply then, just because we don't have that data. Let's go on 30 minutes here. So I'm gonna share my trading view again. Window, here we go. So here, this is the 30 minutes, because that's the time frame we are on Excel charts. And we can see this here, we have displacement, consolidation, and displacement, right? So that will make this, let's remove everything, and mark this out as a supply, and also this, because it's the exact same thing, right? So these are this is 42.1. So let's go back. Starts at 42.1. See if we have anything here at 42.1. If that was the level, let's make sure it was 42.1. Yes, 41. That's over. That's here, right? That's here. And what do we see? Well, we have plenty of stacked triangles. Triangle, triangle, triangle. Triangle, triangle, triangle. Which makes this a valid supply-demand zone. In this case, this is a supply zone, right? Because we have our existing supply, we mark that on TradingView, and we also see there's distribution here, which means that there's consolidation, which means there is supply. Okay, so this is a valid supply zone. Our next one was down at 41.4. Okay, 414. So that's down here. You can see this level hasn't really been tapped all that much, right? We have some taps there, and there, of course. But overall, these levels aren't as... We don't see the same sort of distribution we saw earlier, right? Which means that this is a lower probability supply. We can also see that if we go back to TradingView here, you see that this has been touched many times, which means that it's very likely to start to get mitigated. Okay, which makes this the main supply we're looking at. Okay, that's over here. Okay, so now we have, for this supply here, we have both this displacement and we have the TPO we looked at as well. Okay, makes sense. Perfect. Okay. So, any questions? Because, like I said, you can complicate this very, very much. I don't like to do so because I like focusing on trading rather than trying to name concepts 10 different things and trying to make sense of it. I just like trading, and this is the simplest way I mark out and confirm or reject my my supply demand zones. Supply demand is the same as order blocks. I treat them the same. Manual style platform. It's called ExoCharts. ExoCharts. There you go. I like you're not strict with the supply demand rules. It makes a lot of sense. Yeah. So the reason I'm not strict is because if strict rules worked, right? So if X, for example, this rule set, right? If X and Y happens, Z is the result. If this process worked, where you have some rules, you mark it off in this and this, if that was consistent, you can just code that into a bot and it will trade for you and you would profit, right? But you don't because it doesn't work. That's why I find rules-based systems in general to be bad, right? Because if they worked, you could just code it. You can pay some guy on $5 or $10 to code it and you will be a millionaire. But you're not because it doesn't work. That's why I very much preach discretionary systems. Rules only work on risk management, not on charts. I agree. Hey, I mark my support resistance levels, most of them wicks. Is there anything wrong about it? It depends on your time frame. Okay, so the higher you go in time frames, the more you want to focus on wicks. So, for example, if you're on a 3-minute, these wicks over here are pretty meaningless. So you can actually just turn them off. Settings, just turn them off. Okay. But for example, if you're on a 1 day, these wicks here tend to represent a lot of time, right? This is a daily time frame, so these can be plenty of hours, right? So that means these wicks should be more paid attention to. Okay, so it depends on your time frame. Lower time frames, not too important, but for lower time frames, higher time frames, you'd want to focus more on the wicks when you're drawing your support resistance zones. Someone asked, explain how to find stop loss in my signals. Okay, so the way I do stop losses is finding out levels or zones where a new trade of the same direction is valid. Okay, what I mean by this is, let's say we have price action like this. Let me put some thought to this. Okay, here we go. This is where we're at right now. Let's say I posted a short here. Let's say I posted a short here on in my channel. Well, you'd want to put your stop loss, in this case, above a level where a new short would be valid. So that will obviously be over here. A new short would be valid here because this is a resistance. So bam. Oops. Bad example because it's a terrible risk reward, but you get my point, right? So for example, let's say you'd want a long Bitcoin down here. Say long Bitcoin here. Where would a new long be valid? So let's go down to a lower time frame to see if we find any demand zones. Well, we have this one down here, and we have this one down here. So let's mark out these two. Oopsies. Okay. So here's a point where a new long would be valid, and therefore you set your stop loss right below that. Super simple, right? You can also do this one depending on how high your target is. You want to get some good RR as well. And here also works. That's basically it. You're setting your stop loss based on where a new trade of the same direction is valid. So that's for longs. Let's say you don't want to do short Bitcoin for some reason. Let's say you want to do short Bitcoin. Let's see, up here. Actually, up here. So you short up Bitcoin up there. Now you have to ask yourself, okay, where is a new short valid? Well, up here at this liquidity. So bad, not bad. Zoom out, and this would also be a good level. So this could possibly be a DCA, right? So that's basically it. You just set your stop loss where a right above or right below where a new trade of the same direction is valid. Since we're at daily support bottom range, do you think longs would be a good idea? Yes. I am long. I have a long limit on Bitcoin on 40,000. Currently looking at CHZ long entry market. Could you look at ZHZ? Yes, I can. Of course, I can. I shorted this and it worked out well. What's your confidence for this one, Chief? So this SR level, I expect that, right? One hour demand, 4 hour support. Yes, so it's this support and 1 hour demand. Let's see if I agree with you. You're meaning this zone, right? I don't disagree with you. This is it's a solid demand. Not that as much displacement as I'd like. Just because this isn't really displacement, it's just moves up. You want to see something like this instead. But I mean, overall, still a valid demand zone. So long enough here isn't a terrible idea at all. When you're ready, can you explain a bit on stop loss 8479? So down here, I'll set my stop loss down here because you have this SR level, right? Support, resistance, and you set it right below. So I'd look at something like this, which is stop loss down here, and then target E size highs up here. So that would be my setup. When you're ready, can you explain a bit on a couple of your trade ideas and how one can trade them? Would be fantastic, so I can start putting my own TA and knowledge into practice. Thanks. Yeah, sure. Anything specific? Because I posted quite few setups. So any specific setup you want me to take a look at? CHZ short went up a lot higher. Yeah, let's go back here. Let's go back to my original setup here because I had it marked down. Go back. There you go. So my original setup looked like. Let's find it here. Let's just look at my channel 1 sec, guys. I'm pasting in chat here. My original setup looked like this, where this level wasn't there. Okay. So obviously we didn't close the daily above here, and that's sort of a lot of what I'm looking at. Okay, I'm looking at closes of candles, right? Because when you're shorting a coin that pumps a lot, you're not going to be able to catch the perfect entry. That's just not going to happen. Okay, I'm sorry, you're not the best trader in the world. Neither am I. So you're not going to be able to catch the best entries. Okay, so I very much look at the closes. Okay. On this first daily candle here, I saw we didn't close above my trend line. And that gives me confidence. That gives me confidence to continue to hold this trade, right? Because even though market makers, or not market makers, aggressive orders pushed price up, we still absorbed it all and pushed price down. Same thing for candle 2. Oopsies. Pushed above, didn't close above, and absorbed and pushed down. Okay? So it very much comes down to you being patient and you being confident in your idea. And once you start seeing wicks above your levels, you want to start looking for new levels. Okay, think, is there a high chance we will reject here? Well, we can see that there's supply here, right? There's supply right here. Displacement, supply, displacement, right? So this entire zone, in theory, is a supply zone. This entire thing. So we barely wicked above the top of our supply zone. So that gives me confidence again that we will reject. If something like this happened, where we pushed up and stayed above, I would probably just close this trade in a loss. Because we mitigated this entire supply zone, and we have not respected these trend lines at all. I'll just close, right? But because we haven't closed above, because we haven't really touched above this supply zone, I'm still gonna hold. And what happened? Well, it paid off. It's what, 17% in a few days? So I mean, paid off, right? You just need to be patient, okay? It can be scary with these shorts, but as long as you risk manage correctly, you're going to be good. So when you take an entry on that trade, before you see the daily close, before you see the daily candle close, or after, do you watch for confirmation to enter after the daily, or do you open the trade and let it play out? I open trade with low size because, like I said, we have a massive range to play with, right? So I won't enter 100% here or 100% there. I'll DCA this plenty, right? DCA, and hopefully get a good entry. Because I'm not naive, I know I'm not going to catch the best entry, so I'll just DCA and hope for the best, okay? And we DCA'd and put my average entry around this level here, and we saw some reduction. So the way I cope with me being red, because obviously it can be scary if you enter down here and we're all the way up here, you want to enter with low size and go heavier and heavier and heavier, okay? Based on how confident you are in your idea. So if you start to get more confident, you want to enter heavier. If you start to get less confident, you might want to start lightening up or setting some stop losses, okay? So it comes down to your discretion. It comes down to you being confident or not so confident in your trade, and basing your trade off that. For example, here on CFX, right? We went. It was, let's see, it was 7% above my market level. Why did I continue to hold this? Well, look at this, right? We still had this supply zone. So my idea isn't invalid yet, right? Well, if we went like this, started to consolidate on the 4 hours, something like that, I would start to look to close. But we didn't, and we got the rejection, and we're down 17% here as well, right? So it just comes down to you having to be patient and having to mark out your levels and stay confident if your idea is correct. Okay, don't get scared by being in red. You being in red means you have the opportunity to get a better average entry. That's sort of how you should look at it, right? When you are in red, you have the opportunity to get a better average entry. Obviously, if your idea is good, you don't just enter heavier because you want to. You have to enter heavier if you think your idea is still good. Make sense? So it comes down to how confident you are in your trade, and as long as your idea is valid, there is no reason to close it. There's no reason other than you being afraid, right? As long as your idea is still valid, just hold it. What's the worst that can happen? It teaches stop losses. Okay, just go to the next trade. Who cares, right? You just have to stick to your idea, and as long as that's not invalidated, just hold it, right? Don't as a tip, don't even go to your exchange or terminal. Just don't look at the chart even. Just set alerts, and okay, if your stop loss gets hit, rip, you go to the next trade, and until your TP gets hit, just don't look at the chart, because it's just going to stress you and force you to close the trade because you're scared. Okay, make sense? Good. Totally get it now. Perfect. Do you use any indicators? I use VWAP. That's only like classical indicator I use. I use open interest, delta, etc., and I use option charts as well. Stuff like implied volatility, etc. So I don't use anything like MACD or anything like that now. Why do you mark the levels after consolidation instead of the wicks below above? It's just how I do it. I mean, I don't have any reason for it. I just do. It's just how I do it. Just the way I do it. Do you think you could still be profitable without these tools? I mean, all my charting starts out on a blank chart like, let's say this. All my trades start out like this, and they end like this, right? So I'm not dependent on having indicators or having tools. It just helps me, right? Just helps me. If you're dependent on indicators, you should start going on a naked chart like this and start just marking out key levels. Any reason for the levels like consolidation instead of wicks? There's actually one reason. Wicks tend to be the result of inefficiencies in the market, and I don't like to trade off inefficiencies. I like to trade off efficient markets, and an efficient market doesn't have wicks. Okay, an efficient market barely has wicks. And because wicks are usually the result of inefficiencies, especially on lower time frames. So I tend to just use the bodies. Make sense? Based on what you see in the market right now, do you decide whether you're favoring shorts or longs? I can show you guys. Just give me 1 sec. I'll share my chart. Share my screen. Sorry, a different screen. Sec. Sec. There we go. Okay, let me just run this. Okay, let's remove this, and I'll share this. Change the window, and there we go. Okay. So, if you don't know what this is, I believe I covered it last live stream. It's what you call a volatility skew. Looks at the implied volatility of different options at different strike prices. And what you're looking for is differences in steepness and differences in trend. Okay, so we're currently sitting at around 40k. Let's zoom in here and let's see. Okay, which side is steepest? Well, this obviously you can see that the prices above current strike price, current price is around 40k, is steeper